China has recorded its second lowest GDP rate this year after 1992. Cathie Wood believes their economy is at the verge of dying soon if care is not taken. Why does she think so? Join us to digest Cathie Wood's predictions on why the China economy will collapse in no time to find out why. In a report at the beginning of the year, Cathie Wood mentioned a brewing recession and how this is likely to slow China's economy. This was directed to investors as a warning on how the economy will be in no time. And currently, there is a recession and China's economy is on the very edge of dying. In a letter to investors, Cathie Wood said, "During the next 3 to 6 months, the market is likely to focus more on the risk of a recession in the US, the serious slowdown in the Chinese and emerging market economies, and potentially a surprising drop in inflation." China represents the second largest economy globally, with Alibaba, Pinduoduo, the EV market, technology, and other goods depending on the growth of the economy to survive. China's economy has been hit by a lot of factors, and these are the reasons for Cathie's prediction of an economic shutdown. To begin with, the COVID-19 lockdowns in China were a major contributor to the economic slowdown in China. The lockdowns caused a lot of businesses to shut down, hence affecting the entire stock market, EV and crypto. China's economy is on the verge of collapsing, and it is not funny. Due to the lockdowns and other COVID sanctions in China, a lot of residents could not go to work, shops were closed, goods were going bad, even service providers could hardly do their jobs. Schools were also shut down, and the only places still functioning were online business hospitals, clinics, and the security forces. The lockdowns did not only close shops, but also led to an entire economic activity shutdown, which we will discuss in detail shortly. While the lockdown sanctions in other countries were being minimized, China still held on to its strict sanctions and regulations, and when the lockdown was finally minimized in June, they began to see the real effect it had caused on not only the citizens, but the entire economy. Moving on, Shanghai Container Port, which happens to be the largest container port globally, was also on lockdown, which led to a halt in a lot of businesses. This means the lockdown in Shanghai did not only affect them, but affected the import and export business globally, and containers could not be shipped. Shanghai is not only the largest port in the world, but it also links the Chinese economy to the entire global economy. So the lockdown of the port affected the supply chain globally. Manufacturers in Japan who deal in the manufacturing and production of cars, electronic devices, and appliances had to put a brake on manufacturing since they were not able to get the shipment on their goods, and made some of them to divert into producing other items, while some of them simply slowed down production. The entire Chinese market was affected by the slowdown, so that even neighboring countries such as Japan were also affected. Not only was Japan affected, but they withdrew a large sum from their investment in Alibaba. We shall discuss that shortly. The COVID regulations made the economy shrink to 2.9% in 2021, but this year it has increased a bit to 3.2%. Aside from these, Cathie believes the Chinese economy has fallen because of some of China's big tech markets have lost a lot of investors due to the strict COVID rules. And also because of the supply chain issues, production is slowed, hence decrease in China's revenue. Some powerful private companies are losing their grip on investors and analysts. For instance, Japan's SoftBank took out a huge sum of money from Alibaba, and this is also contributing negatively to the economy. Warren Buffett also sold out his shares with the electric vehicle company BYD, and Tencent also withdrew more than $7 billion worth of investment during the second half of this year. As if this is not enough, China and the US are in a trade war that has affected a lot of EV companies, including Tesla, NIO, impacting negatively on the entire stock market and the Chinese economy as a whole. Productivity and revenue is reduced drastically, leaving the Chinese economy in shambles. The Star Investor believes it will be more difficult to deal with China's economic crisis than expected because it is getting out of hand. Cathie is not only concerned about the economic shambles of China, but she is also very worried the Feds will take a decision that may run the US economy into shambles as well. For more details on this, watch our video on how Cathie Wood goes hard on FTX, crypto, Fed policies, and Elon Musk.